Hello and welcome to the Mutual Fund Show. I'm Niraj Shah. The next 25 odd minutes, we'll talk about two key aspects of mutual fund investing. Actually, we've split the show into two. The first, a lot of people are worried about what's happening in the world and whether Indian markets get impacted, and therefore should they become risk-averse investors. We try and dissect that with somebody who's looked at this very, very closely from that lens as well in the first half of the show. And the second half of the show, a lot of people, including people in my office, were clueless about the fact that there are very good options on the mutual fund side to get better returns for money lying idle in your bank accounts or money in fixed deposits. And we'll try and talk to two experts who will join us in the second half of the show to talk about that very aspect. But the first half of the show is with Aashish Sommaiyaa, CEO of WhiteOak. He needs no introduction. He's been with us from the start of our journey when we were Bloomberg Quint and now BQ Prime. Ashish, great having you. Thanks for joining in. It's been a while, but good seeing you.
Thank you. It's always a pleasure. Thanks for having me.
No, the pleasure is entirely ours. Ashish, so that's the point. In fact, on our trade setups, on a bunch of our Twitter Spaces programs as well, or shows, or rather conversations as well, there's so many people who are talking about whether this is a good time to be risk averse. Now, my question to you is, you are launching schemes, you're going out and meeting people, you must be getting a pulse of what people are doing, and you've seen multiple such cycles. Do you believe people should be risk averse and diversify accordingly, looking at what's happening around the world?
Yes, Neeraj, I think over the number of years, I've seen that investors have become more and more discerning. They have, this is obviously people with experience. Well, we know the construct of our market is such that practically every day, every week, and every month, there are new investors who are joining the world of mutual fund investing and equity investing and capital markets in general. But over the years, I have seen that there is a critical mass for a larger number of people who are becoming more discerning, more experienced, and more seasoned. So, frankly, while we are discussing it right now, whether people should be risk averse or not, but if you really see the data and my interactions also, it clearly shows that people are becoming a bit more, cautious right now. Two or three things. I think one, obviously, the narrative on India at every level is seen to be positive, whether it's our economy or corporate performance. But on the other hand, if you see the global environment, I'm sure that's what you're quoting. So if you see the global environment, I don't think very many people are buying into the decoupling story a lot too much, right? Because economies and corporate sectors, one can always argue that we will have different levels of correlation or isolation. But as far as stock markets are concerned, beyond a point, maybe you fall less, or maybe you recover faster, or maybe you outperform. But you can't be really, you can do relatively better. But absolute numbers, you can see last 1 year, there's no return. Correct. And October 21 was 18,400. But as recently as June 22, we were at 15,000. So that 18-20% was not a small number. So I think, yes, people should be risk averse. People should be careful and cautious. And I can already see it in people's behavior.
Okay, interesting. So just wondering, Ashish, I don't know, because you guys run a very large PMS and a large mutual fund business in the making, just wondering, what is the house view currently? For people who want to be conservative in such times, I just thought of that question. For somebody who's a small cap investor, should he choose mid cap or flexi cap funds? For somebody who's a flexi cap investor, generally, should she or he choose large cap funds? And for somebody who's a large cap investor, should she actually move to the debt side because they want to be ultra conservative or conservative than what they usually are?
Yeah, so see, clearly everybody has a risk profile, and everybody has an asset allocation, or at least everybody should have an asset allocation which is in line with the goals that they want to achieve. And clearly that asset allocation should be devised as per the risk-taking appetite. So from that perspective, you're right that everybody is in a different position relative to each other, clearly. And when you look at your asset allocation, let us say you are somebody who is supposed to be 50% equity and 50% in debt. Let's take an example, right? And you find that in the recent times that 50 has become 60 or 65. because there has been kind of last couple of years things have been on an upswing. Last 1 year not so much, but clearly in the last couple of years people have made some appreciation. So if you are overweight, if you were holding money in equity but you had some loan to repay on the other hand, so one is at an asset allocation level, it is better that you are neutral to what your desirable weightage is. Hopefully in these kind of scenarios where we are talking about being cautious, you should clearly not be overextended. That is one thing. Like I briefly alluded, if you're investing at the cost of repaying some loans or something, then you might want to prioritize that. Coming to your other question, obviously, so that naturally dovetails with what you are saying, which is that if you are somebody who invests in equity regularly, okay, but then what you're finding is that you're not you think that it is time to be cautious, then maybe you should be in a large cap fund or a balanced advantage fund, instead of going at the extreme end of equity. You briefly mentioned that we are launching products at this point in time. Now, clearly, when we go through a whole regulatory process, and when we get approvals, we get products out. But our objective is always to beat our corresponding benchmark. We are not controlling individual investors' asset allocation. And when people are subscribing to any fund, we assume that they are self-advised or they're advised by somebody else who's helping them, whichever way. So we have to assume that people are taking care of their asset allocation. So when we launch a product, we are not going to take cash calls. As an equity house, our mandate will be to beat the corresponding benchmark. But on the other hand, as far as investors and advisors are concerned, they should definitely be mindful of what is desirable asset allocation on that.
Got it. What would be, okay, maybe it's a wrong question to ask because you run AMC, but if you had a choice to, as a retail investor, to put out an ideal asset allocation currently, it may be for a period of 1 year and then you may pivot towards either a more risky or even more conservative as the case may be, but under current circumstances, what would be your ideal allocation, Aashish?
Yeah. So, first, very briefly, I want to, since we are talking about caution and, being careful about asset allocation, etc., just to contextualize, why am I saying this and what is it that I'm thinking about? So just to contextualize, basically my worldview, or at least our worldview, is that, everything about India is great. We are not debating that. But our market obviously is operating in a context of an external environment. And the external environment is not as rosy. Different parts of the world have different reasons and they have their own problems, right? On a relative scale, we are looking better, but we are not fully, stock markets are not isolated. So basically, when so many parts of the world are in trouble, the chances that, some or the other risk could precipitate, some or the other negative news flow, some or the other impetus for a market correction. And like I said, as recently as June, we were 20% lower than where we are. None of those reasons have gone away and we are making new highs all over again. So let's just say that risks are rising and we should not be lulled into complacency. So what does this mean? What does this translate into as far as your question is concerned? I would basically say that today, when ultra short-term funds, and you briefly alluded, you are going to talk about this in your next segment, like you mentioned. So, short-term rates are at 6%. Today, ultra short-term funds, liquid funds are giving 6%, 6.5%. Ultra short-term funds, by the way, our running yields are somewhere in the range of 7%. You give or take 20, 30, 40 basis point expense on a growth option, and ultra short-term fund gives 6.5% today, right? So short-term rates have really gone up. Interest rates have gone up across the spectrum. On the other hand, we already discussed about equity. So if it was my money, what I would do today, I would park all that money in an ultra short-term fund. On a running basis, 6 months back, it was giving barely 3-4%. Today, it is giving 6.5%. So I would park all my money in an ultra short-term fund, right? And I would register a systematic transfer over a kind of slightly long-run systematic transfer. See, usually people transfer money in 2-3 months. But I would register a systematic transfer, put money in an ultra short-term for next 6 months, and drip the money over 6 months. Or if there were to be a correction in the market, let's say we were to go back to 15, 16,000, then I would kind of accelerate the moves. So if it is my money, this is what I would do. Put it in an ultra short-term fund and then see how to drip it into equity, depending on what type of opportunities are available. Because I don't see much, fundamentally not too much is going wrong right now, but just that the external environment could give us some kind of corrections along the way.
last question, Ashish, and which is, if you had a chance, and I know funds, funds, houses have their own philosophy. You may not have a philosophy of a thematic fund. There might be a lot of time between what a regulation permits you versus what you can launch in an ideal time. But like you mentioned, that external environment is not looking that great, but India seems to be doing okay. There are some right notes that are being hit, etc. If you had a choice of a thematic fund, Ashish, where is it that you believe your house would launch a thematic fund?
Yeah, I think that the whole financial space is one. Okay, it's kind of talking about banks and all is beaten to death. I'm not debating, not discussing that. But the broader sense of financials, everything to do with capital markets, whether it is exchanges, RTAs, depositories, wealth managers, asset managers, the whole space. Because I think that is what has changed dramatically in the last 5 years. And I think for the next few years, that is what will continue to accelerate, according to me. That is one area. Second thing is, if you really ask me, consumer durables or discretionary. Because, see, look, when we are talking thematic, we are not trying to, it wouldn't make sense for me to say, okay, IT has underperformed a lot and I think next 6 months it will outperform. Because I imagine that when you and me are talking thematic, we are not talking about a 6-month mean reversion kind of thing. So we are definitely talking, at least a fund which will, we don't need to close it in 3 months or 6 months,
Yeah, sure.
which will go on for the next 5-10 years. Then I would say that, beyond banks, the broader financial and consumer discretionary, I think these are two areas which are maybe sustainable.
Great. Ashish, it is always lovely talking to you and great. So today as well, thank you so much for taking the time out and being with us. And you should come more often on our platform.
Thank you. It's my pleasure. Thank you very much.
Really appreciate it. Well, that's the view from Aashish Sommaiyaa, CEO of WhiteOak, and they are a very large portfolio management services house any which ways, and have launched a few things on the mutual fund side as well, and some views around risk diversity and managing risks within your portfolios as well. If you are a conservative person, and maybe you need to be. We could add this conversation with our next two experts.